In October 2020, a man walked out of the most powerful semiconductor company on Earth, the company he had spent 14 years building a career at, rising to become its top executive in the world's largest technology market, and started a competitor. He did not take a break. He did not consult. He did not wait to see how the geopolitical situation developed or whether the export restrictions would be relaxed. He registered a company in Beijing, assembled a team of engineers, and started building. The man is Zhang Jianzhong. The company he left was Nvidia. The company he founded is called More Threads. And what has happened in the 5 years since that October afternoon in 2020 is one of the more remarkable stories in the history of the semiconductor industry, not because More Threads has beaten Nvidia, but because it has done something that many people in the technology industry considered equally improbable. It has built a company from zero that is now on China's official government procurement list for artificial intelligence infrastructure. That has posted 243% revenue growth in a single year. That has delivered day zero adaptation for the most widely deployed open source AI models in the world. That has shipped a 10,000 card AI training cluster based entirely on domestically designed chips. That has become the first of China's domestic GPU companies to list on a major stock exchange and saw its shares surge 425% on the day of its debut. In 3 years of meaningful commercial operation, from first chip to government procurement list, More Threads has gone from a startup that nobody outside the Chinese semiconductor industry had heard of to the company that Nvidia's own former China head believes can fill the gap that Nvidia's export restrictions created. This is how he did it, and what it means. Subscribe to Signal Leap before we get into the details. This ecosystem, the Chinese domestic AI chip market, is moving faster than most reporting captures, and we cover it every week. To understand what Zhang Jianzhong built, you have to understand what he left, and more importantly, why the timing of his departure was not an accident. Zhang spent 14 years at Nvidia, not as an engineer, as the person who built Nvidia's China business. He understood from the inside how Nvidia's GPU ecosystem worked, the hardware architecture, the CUDA software platform, the developer relationships, the enterprise sales motion. He also understood something that most people outside the top levels of the semiconductor industry did not yet fully appreciate in 2020, that the US-China technology confrontation was not a temporary condition that would resolve itself through diplomacy. It was a structural feature of the next decade, and it was going to create a market. The October 2022 US export restrictions, which cut off Nvidia's A100 and H100 chips from Chinese buyers, validated that judgment with precision. By that point, More Threads had already been operating for 2 years, had completed multiple rounds of financing including investment from Sequoia China and ByteDance, and had shipped its first GPU products. Zhang did not pivot when the restrictions arrived. He had anticipated them. More Threads' strategic positioning from the beginning was deliberately Nvidia-like in its architecture. Where most Chinese chip companies focused on specialized accelerators chips that did one thing well, but required a completely new software stack, More Threads built what it calls full-function GPUs. Chips that handled AI acceleration, graphics rendering, and general-purpose parallel computing simultaneously, in the same way Nvidia's chips do. The strategic rationale was explicit. If Chinese companies needed to migrate away from Nvidia, the migration cost had to be minimized. A chip that works differently from what developers already know requires re-education. A chip that works similarly requires only adaptation. The software architecture that enables this is called MUSA, More Threads Unified System Architecture. It is designed to maintain high compatibility with mainstream international GPU ecosystems, specifically to reduce the effort required for developers who have built their workflows around CUDA to move their code to more threads hardware. This is not a small engineering decision. Nvidia's CUDA Moat the accumulated 2 decades of libraries, tools, and developer familiarity is widely considered the single most durable competitive advantage the company has. Building a software layer designed to lower the migration cost from CUDA to MUSA is the architectural acknowledgement that the moat is real, combined with a specific strategy for crossing it. The product that translated this strategy into revenue is the MetaX 5000 More Threads current flagship data center GPU based on the 4th generation Pingu architecture, which entered mass production in 2025. The numbers that the MetaX 5000 has delivered are worth examining carefully, because they tell the story of where More Threads actually sits in the performance landscape, which requires holding 2 facts simultaneously. The first fact: the MetaX 5000 is not equivalent to Nvidia's current best. Against Nvidia's Blackwell B200, there is a meaningful performance gap in raw compute throughput on training workloads. More Threads has not published head-to-head benchmarks against the B200, and independent verification at that level of comparison is difficult. The company's own claims about the upcoming Huashan chip, which its CEO stated would outperform Nvidia's Hopper architecture in computation, bandwidth, and bandwidth capacity, have driven significant investor attention but rest on unverified forward-looking projections rather than published test results. The second fact: the MetaX 5000 is not being compared to Nvidia's current best in the market it operates in. It is being compared to chips that Chinese customers can actually buy, which, since April 2025, is effectively nothing from Nvidia at the H20 tier and above. In that comparison, the MetaX 5000 is not only competitive, it is available. And availability, in a market where the alternative is unavailability, is the dominant product attribute. The inference performance data that has been independently verified is significant on its own terms. Running the full DeepSeek R1 671 billion parameter model, one of the largest open-source A1 models publicly available, the MetaX 5000 achieved a single-card prefill throughput exceeding 4,000 tokens per second and a decode throughput exceeding 1,000 tokens per second. These are numbers that the Chinese AI developer community had not seen from domestically manufactured chips before. They represent a qualitative shift in what is possible without importing hardware. The March 2026 contract announcement completed the picture for commercial credibility. A 660 million yuan order for a smart computing cluster, roughly $93 million, demonstrating that enterprise customers in China are making 9-figure procurement decisions based on More Threads hardware. The Day Zero adaptation story is where More Threads' positioning becomes genuinely strategic rather than merely commercial. In February 2026, something happened that the technology industry should have paid more attention to than it did. DeepSeek, the Chinese AI company that had already reshaped the global AI landscape with its January 2025 model release, was preparing to launch its next flagship model, a 1.6 trillion parameter system called V-Four. AI developers routinely share pre-release versions of major models with major chip makers, so those chip makers can optimize their software in advance. Nvidia had participated in this process with DeepSeek before. AMD had participated. It was a standard industry practice that benefited everyone. Chipmaker gets advance notice, developer gets a smoother launch, customers get better performance on day one. For DeepSeek V-Four, the invitations changed. Nvidia received nothing. AMD received nothing. The American chip companies that had previously collaborated with DeepSeek's technical teams were given no advance access, no pre-release software, and no opportunity to optimize before launch. Instead, DeepSeek gave the access to Huawei, to MoreThreads, and to other Chinese domestic chip suppliers several weeks in advance, specifically so they could tune their software for the new model before it launched publicly. When DeepSeek V-Four went live, MoreThreads hardware was ready on day zero. Nvidia's was not. The decision was not accidental, and it was not purely technical. It was a signal about the direction of the Chinese A1 ecosystem, a deliberate choice to prioritize the domestic hardware stack at the moment of a major model launch, in a way that is very difficult to undo once customer expectations are set. The AI companies and enterprise customers that evaluated DeepSeek V-Four on Chinese hardware were evaluating it on hardware that worked on day zero without additional configuration. The experience of smooth day zero operation on domestic chips versus uncertain performance on foreign alternatives is exactly the kind of experience that shapes long-term procurement decisions. MoreThreads had also completed day zero adaptation for Jipu GLM5 and day zero adaptation for Minimax M2.7, two other major Chinese A1 models in the months surrounding the DeepSeek announcement. The pattern was consistent. Whenever a major Chinese A1 model launches, MoreThreads hardware is ready before or at the moment of launch. This is not happening by accident. It is the result of an explicit ecosystem strategy that treats model launch day as a competitive event, not an afterthought. The performance data from these optimizations is concrete. Through collaboration with the FlagOS community and system-level optimization work, MoreThreads reported a 16.5% reduction in time to first token latency, and a 65.7% improvement in overall throughput via automated kernel tuning for DeepSeek workloads. These are engineering results that translate directly into the cost per query economics that determine whether a cloud provider makes money running inference workloads. The government procurement list is the development that changes the nature of this story from commercial to structural. In May 2026, Tom's Hardware and other technology publications confirmed that China had added domestically designed AI chips to the country's official secure and reliable government procurement list for the first time. 9 domestic chips were certified. MoreThreads was on the list, Huawei's Ascend series was on the list, Cambricon was on the list, Nvidia was not on the list. This is not a preference. It is a procurement mandate. Government agencies and state-backed enterprises across China, which collectively represent a substantial fraction of the country's AI infrastructure spending, are now required to source their AI chips from the certified domestic list. The market that Nvidia was selling to, through Chinese cloud providers and state-backed AI projects, has been formally redirected. The financial result of this redirection is visible in the numbers MoreThreads has published. Full year 2025 revenue, 1.505 billion yuan. That is 243.37% higher than 2024. Not a rounding error. Not a statistical artifact. The company's revenue nearly tripled in a single year. First quarter 2026 revenue, 738 million yuan, up 155% year over year. The acceleration is continuing, not plateauing. First half 2026 revenue, 1.736 billion yuan. That is 147% higher than the same period of 2025, and more than the entire 2025 full year figure. In 6 months of 2026, MoreThreads generated more revenue than it did across all of 2025. The trajectory is not a bump. It is a structural shift in who buys what from whom inside China's AI infrastructure market. MoreThreads is not the only company in this space, And the full picture of what is happening in China's domestic AI chip ecosystem requires acknowledging the others, because MoreThread's success is part of a pattern, not an isolated outlier. The group that Chinese technology media calls the Four Little Dragons Xiao Long consists of MoreThreads, Biren Technology, Cambricon, and MetaX. Each was founded within a few years of the others. Each was built by engineers who came from American or European chip companies. Each is pursuing a slightly different technical strategy within the same broad goal of replacing Nvidia for specific workloads. MoreThreads, as we have established, is the most Nvidia-like in architecture full-function GPUs that handle both graphics and AI. With a software platform designed to minimize migration friction from CUDA. Biren Technology is focused more narrowly on AI training and inference for data center workloads without the graphics component. Its founders accumulated over 30 combined years at AMD's CPU and GPU divisions before returning to China to build a domestic alternative. Biren listed on the Hong Kong Exchange in early 2026 and reported 207.2% full-year revenue growth in 2025. The company is not chasing gaming or consumer markets. It is targeting the exact workload training large AI models at scale, where Nvidia's H100 and B200 are most dominant and most restricted. Cambricon takes a different approach entirely. Rather than building general-purpose GPUs that compete with Nvidia directly, Cambricon develops specialized AI inference accelerators chips that run trained models efficiently rather than training them. This is the workload that dominates deployed AI infrastructure by volume. Since every query a user sends to an AI application is an inference operation, not a training operation. Cambricon reported five-fold revenue growth for 2025, and its first full year of profit since going public in 2020, the first domestic AI chip company to achieve profitability. In its first half of 2026, Cambricon reported revenue of 5.996 billion yuan, up 108% year-over-year, with net profit rising 122%. These are not startup numbers. These are the financials of a company that has found its market. MetaX was founded by Chen Weiliang, a former AMD senior director who led GPU product design alongside engineers from AMD, Nvidia, and Samsung. MetaX reported doubled annual revenue in 2025 while narrowing its net loss by nearly half. Like MoreThreads, MetaX prioritizes CUDA compatibility in its software stack, the same acknowledgement that migration friction is the real adoption barrier, and that the company willing to minimize it gains the customer. All four companies are growing at triple-digit or high double-digit rates simultaneously. This is not coincidence. It is the visible output of the same set of forces: export restrictions removing Nvidia from the market, government procurement mandates directing spending to domestic alternatives, and AI infrastructure demand growing fast enough that even a chip ecosystem still developing its capabilities is receiving more orders than it can immediately fill. The constraint that all four companies share is the one that runs underneath every story about China's domestic semiconductor ambition: manufacturing capacity. All of the certified chip makers are competing for production slots at SMIC, whose most advanced stable node is N+2, roughly equivalent to 7 nanometers. SMIC reported overall utilization rates above 93%, and spent $8.1 billion in capital expenditure in 2025, with plans to hold that level through 2026. The fabs are full. The chips are in demand. The bottleneck is wafers, not customers. This is the constraint that makes the SMIC N+3 advancement we covered in our previous video directly relevant to this story. Moving more threads Huashan chip to a 5nm class node when that production is available at meaningful yield rates would close a significant portion of the performance gap with Nvidia's current generation. The manufacturing improvement and the chip design roadmap are not separate stories. They are the same story at different layers of the supply chain. Now, the honest assessment, because understanding what more threads is, requires understanding what it is not. The CEOs claim that the upcoming Huashan architecture outperforms Nvidia Hopper in computation, bandwidth. And bandwidth capacity is a forward-looking assertion made at a developer conference, not a verified benchmark result. The absence of published, independently verified head-to-head performance data against Nvidia's current generation is notable. Companies that have genuine performance leads against competitors tend to publish the data. Zhang Jianzhong's Nvidia background means he understands what a credible benchmark disclosure looks like. The fact that More Threads has not yet published one suggests either that the comparison is more nuanced than the conference language implies, or that the benchmarks are still being optimized before disclosure. The software ecosystem gap is real. MUSA's compatibility with CUDA workflows reduces migration friction compared to building from scratch, but it does not eliminate it. Engineers who have spent years optimizing code for Nvidia's specific hardware characteristics, the memory hierarchy, the interconnect topology, the precision handling will find that optimization that worked on an Nvidia chip requires rethinking on More Threads hardware. This is not a deal breaker for the domestic Chinese market, where the alternative is now unavailability. It is a real cost that enterprise customers absorb when they make the switch. The profitability question matters too. More Threads has not yet turned a profit. Net losses in 2025 narrowed to between 950 million and 1.1 billion yuan, down from 1.6 billion yuan the prior year. The losses are narrowing. The revenue is growing. The path to profitability exists if the trajectory continues. But the company is still investing significantly more in R&D than it earns in operating margin, and the Huashan and Lushan chips that Zhang unveiled at the December 2025 developer conference represent forward spending, not current cash generation. None of these limitations change the direction. They define the current position on a trajectory that has covered extraordinary ground in 5 years. Zhang Jianzhong stood on a stage in Beijing in December 2025 and unveiled the Huashan architecture More Threads 5th generation and the 2 chips it would produce. Huashan, named for the sacred mountain in Shanxi province, targeting AI training and inference. Lushan, named for the mountain in Jiangxi province, targeting high-end graphics. He announced that the company's Quai 10,000 card cluster already built was capable of training trillion-parameter models at scale. He laid out a roadmap to 100,000 card clusters. The company he was standing in front of had been incorporated 5 years earlier in a building in Beijing. In those 5 years, it had shipped China's first domestically designed full-function GPU. It had built the country's first large-scale computing cluster based on domestic chips. It had delivered Day Zero A1 model adaptation for the models running on hundreds of millions of devices. It had gone public at a valuation over 100 times, trailing revenue the market's expression of what it thought the next 5 years would look like. Jensen Huang, speaking about the China market in May 2026, said that the $50 billion opportunity had effectively been handed to Huawei. He was talking specifically about data center AI chips at the highest performance tier. But underneath that tier, in the inference market, in the mid-range computing cluster market, in the government procurement market where 9 domestic chips are now certified, and Nvidia is not the opportunity is being distributed across the 4 little dragons, with More Threads as the one that is farthest along the path to commercial scale. The man who built Nvidia's China business for 14 years looked at what was coming in 2020 and started building the replacement. The government mandate that arrived in May 2026, certifying more threads for official procurement while leaving Nvidia uncertified, is the policy confirmation of what the technology trajectory had already suggested. In 3 years of meaningful commercial operation, from first production chip to official government procurement list, the startup that Nvidia's former China head founded to replace Nvidia has been placed on the list. The replacement is underway. Subscribe to Signal Leap if you want to follow where it goes next. The Huashan chip, designed for training workloads, is coming. SMIC's 5nm class node is available for new designs. The government procurement mandate is expanding, and the 4 little dragons are all reporting triple-digit revenue growth simultaneously. One question for the comments. The MUSA architecture is specifically designed to reduce the migration cost from CUDA. But Zhang Jianzhong spent 14 years at Nvidia and knows exactly how deep the CUDA ecosystem runs. So here is the question. Do you think software compatibility is ultimately solvable for a domestic Chinese GPU company? Or is the CUDA moat the one constraint that revenue growth and government mandates cannot overcome? Drop your answer below.